Okay, good evening, everyone. Welcome to this intro to the TTM Squeeze class. As I just mentioned, this will not last very long. It's simply just an introduction to what the TTM Squeeze is, how to load it into your trading platform, the idea behind it, some of the add-ons that you can get for the TTM Squeeze, and then at the end, there's a link for an in-depth video between Ray and Cyberdog that he had done on the weekend shift back in January. And so no sense in repeating the effort. He already did a great job of explaining it. So you can check that out. So I will go ahead and get started here. And can you all see my screen?
No, not yet.
It's loading up now.
All right,
Yeah,
perfect.
there we go.
Okay, so the TTM Squeeze is it's an indicator that was created by John Carter of Simpler Trading. For those of you that haven't heard of John Carter, he's been around for quite a while. He runs simplertrading.com. He wrote the book Mastering the Trade, which if you haven't read as a trader, I highly recommend that you do so. He made, I want to say it was $18 million last year off of a $1.2 million portfolio. So he's been around for a while. He knows what he's doing. He's created a whole bunch of indicators. So we'll just focus on the squeeze for tonight. So first things first, it is available for free in TOS. So if you're using Thinkorswim, there's a free version there. You would be able to find it here under Add Studies, All Studies, John Carter Studies, and then the TTM Squeeze. Just a heads up, the free version on TOS is the regular squeeze. So all you will see is either the red dots or the green dots, and I'll explain what the different colored dots mean. If you're using TradingView, there is a Squeeze Pro version. So it would have 3 different levels of squeezes. So you can get that here by Mackett, so Squeeze Pro indicator, and then there's the arrows as well. Okay, it's pretty close to the original squeeze. It's not 100%. I'd say it's like 98%. So it's good enough that you don't have to spend, $700 or $800 on the indicator when you can get it for free. So what is the idea behind the squeeze? So when the market makers are pricing in options moves, they are pricing in what the expected move is. The squeeze basically looks for a greater than expected move. So it could be a monthly chart, it could be a 5-minute chart, it could be a 1-minute chart. Okay, the squeeze will appear on any time frame. And so if you're in Thinkorswim, you will see that it shows you what the expected move here is. So in this case, and so just a heads up, I took this directly out of John Carter's course that I took a couple of years ago. So this is where it's from. I didn't come up with this. This is his. So, all the credit goes to him. So, this is a screenshot here of Home Depot. The average squeeze lasts between 8 and 10 bars. So basically, if you're looking at a daily chart, it would last for 8 to 10 days. You can see that the expected move here is about $3 over a 7-day period and about $4.30 over a 14-day period. So the squeeze will set you up for a greater than expected move. I'm sorry, let me see if I can. Somebody's got a hot mic there.
Pretty sure Apple AirPod Pros, $250. These are sick.
Does anybody know how to mute somebody remotely?
Headphones. You notice that? These are the holy grail of headphones.
But you could just tell them I trade in Stratosphere. You got hot mics.
Yeah, I was going to say, just remind everybody, mute mics on entry.
I can actually mute everyone here. There we go. Perfect. Can you still hear me?
Yep.
All right, good. Okay. So the greater than expected move that the squeeze is setting us up for would be greater than this, $3 move here in 7 days and $4.30 that's being priced in by the market makers for the 14-day strike. So this is the whole idea behind it. We are looking for a greater than expected move because of how the squeeze is actually built. So let's talk about that here. So the expected move you can see over a week is about $3. The market makers don't factor in a squeeze. So this is still sort of a cheat code, even though the squeeze has been around for, I want to say like 20 years, they don't factor it in, right? And so what it tells us is that when something is in a squeeze, the at the money and out of the money options are actually mispriced, which gives us an advantage there. So how is the squeeze actually created? It's very simple. It's when the Bollinger Bands, so if you're familiar with the Bollinger Bands, it's basically bands that track 2 standard deviations outside of the 21 EMA. So it takes the Bollinger Bands, which is the red, and the Keltner channels at 1.5 ATR, so the average true range. And all it's telling us is when the Bollinger Bands contract so that they are inside the Keltner channels. And that means that there's energy that's been built up and it now needs to be released, okay? If the momentum is above 0, then when it pops out, you look for a move to the upside and vice versa. Okay, and we'll talk about that here in just a second. So instead of having this on your chart, what John Carter did was just coded it, or had somebody code it, so that it showed up as these red dots here down at the bottom. So you can see that anytime we're within, anytime the Bollinger Bands are within the Keltner channels, you'll see that it's a red dot down here. And then with the momentum, all he's done is just convert it into a histogram. So if it's above 0, below 0, it tells us basically what direction price is likely to move. We don't worry about this too much because we're using, we would be using the TTM squeeze with the strat. So of course, the strat will always be our primary focus. The squeeze will just give us an indication of, what might happen. So if we see that, price has been consolidating or aggregating, then if we see a squeeze, we know that we can expect a greater than expected move. And so that mainly ties into, what kind of option strikes we would be picking. So a quick and easy way to see it would be just down here, the TTM squeeze. I'll talk about the Squeeze Pro here in just a sec. And the signal will last between 8 and 10 bars. Okay, so after the squeeze fires, the momentum based on this indicator here will continue for between 8 to 10 bars. And so here, just an example of how the squeeze would have worked out, no indicators on the chart. We can obviously see our strat here if we paid attention to it, but all we're looking at here is the squeeze. So you can see here, price was consolidating. And then when it finally fired off, we had this big move to the upside. So the quiet period, again, just to recap, would be when the Keltner channels, when the Bollinger Bands contract to be within the Keltner channels. And then when it fires off, that's when the move happens. Ignore this here. The only thing that I want to point out is that the range that we're looking at here. So when the squeeze is basically intact, you can see how the move took us from 165 to 186. And then the momentum shift, which I'll talk about there in just a sec, at 180. So it was a $15 move. The 160 call at 7 would have turned into 20. The 165 would have gone from 2 to 15. So very similar to, the types of results that we see in the pack. And so you can see how powerful of a move there was. And if you pick the right strike, you can do very well. So nothing new compared to what we're already doing here at Alpha Pack. And so now that was the regular squeeze. And so after a while, after, I guess, years of using the squeeze, he realized that there were signals that he was missing. And so, went back to the drawing board and essentially came up with what's called the Squeeze Pro. So if you have toss, it's not free. It's just the regular squeeze that's free, so the red dots. If you use the free version in TradingView by Mackett, it is the Squeeze Pro. And so what's the difference? The difference here is just measuring how much contraction we have based on the Bollinger Bands and the Keltner channels. So if we have sort of, we'll call it a loose squeeze, that would be the black dots. If we have a regular squeeze, so the regular TTM squeeze is still the red. And if we have a very tight squeeze, we would have the orange dots, okay? And so all it's showing us is how much compression we have. Think of it this way. Think of it as if it's a spring. The more it's compressed, the more energy it will have to release. Right? And that's all there is to that. So the most frequent ones, if you're using the Squeeze Pro, would be the black dots, okay? They are the loosest squeeze with the highest probability setting. Okay, the standard squeeze would be the red dots, and the orange dots are the tightest setting. And so it's important to note that the black dots are the only ones that can occur by themselves. And let me explain why. As the Bollinger Bands compress, a black dot squeeze, which is the loosest setting, can actually turn into a red dot squeeze. And then a red dot squeeze, if the Bollinger Bands continue to compress, can turn into an orange dot squeeze. And so what does that actually mean? If you see a black dot using the Squeeze Pro, that's all there is. It's just a black dot squeeze. If you see a red dot, it's actually a red squeeze on top of a black squeeze. And if you see an orange, it's an orange on top of a red on top of a black. So when the orange one fires off, you would still have a red one that has yet to fire off. And then when that fires off, you'll have the black one. And when the black one fires off, then that means that, all of that energy has now been released. And so how would it look on the chart? You would have, these are just the black dots. These are the red dots. These are the orange. And so if we put them all on one, basically indicator tab, I guess, if you want to call it that, you can see that there's the black, which becomes the red, which becomes the orange. When that fires off, the red is still there, then the black, and then the green just means that there's no squeeze present at that time. And so when you're setting it up, it's very important to note that we do not use extended trading hours for equities. Okay, if you are using the squeeze for futures, for Forex, for crypto, you would obviously keep extended hours on because it trades, pretty much like crypto is pretty much 24/7, right? But if you're using it for equities, it's very important to note that you're not using the extended trading hours. If you do, it will throw off all of, you'll basically have incorrect squeezes. Okay, so when you start using the squeeze and you see one on a chart, ask somebody else who's got it just to confirm in the beginning, because oftentimes you'll get a squeeze when there isn't one if you have extended hours on. So just keep that in mind. And so here's an example of XLI. And so you can see that the Squeeze Pro is significantly better than just the regular squeeze. Okay, so if you're using it on TradingView, the Squeeze Pro. If you're using it on toss, just keep in mind that you might you would only see the red dots. There is another, there's another site where you can get a whole bunch of these indicators that somebody has basically reverse engineered. I'm not sure what it is. I'll look it up and post it in the group. But you can get a lot of the same types of indicators for almost free. So just keep an eye out for that. I'll share that later today. Okay, so we've covered what the dots represent. Now let's talk about the histogram, okay? The histogram basically tells us which direction the squeeze is likely to fire, right? So where is price likely to continue going? So if it's light blue, it means that the momentum is above zero and rising. So this would be bullish or would be in the markup phase. If it's dark blue, then the momentum is above zero, but it's falling, right? So here, and that's neutral, and that would be distribution, right? So you can see that down here, sorry, up here, and price is going down. If it's red, it means that momentum based on that indicator, remember price does not have momentum, it aggregates. For the purposes of this and how it's created and explained, it does use a momentum indicator. And so if momentum is below zero and falling, this is the markdown phase. And so you can see that here. And then if it's yellow, and pay close attention to the yellow, I'm going to show you guys a really cool trick here. If it's yellow, it means momentum is below zero and it's rising. So that is the accumulation phase. If you see yellow momentum and then it goes into a squeeze, that's what he called a slingshot squeeze. So oftentimes it's, you know, when price is turning. So if we were looking at it in terms of like a reversal, you know, you can see here that we had a 2 down, we had a 2 up, and then we had another 2 up, right? So this would have been our 2-2 reversal. You can see here that momentum had shifted. And then if we were looking for a squeeze, it would have come later. So we would have actually already been in this. But Ray does a great job of explaining how he uses momentum in his video. And so when it comes to some of the other tools that are out there, now keep in mind, they are not cheap. So unless you're actually going to use it all the time, it's probably not worth the cost. Like these indicators run hundreds of dollars. Okay. And if you're using TradingView, they don't actually have all of them, which kind of sucks because I don't use TOS. So you can see here, this is just labels on TOS, but what's really cool is there's 2 features. So there's the arrows, which basically tell us when the squeeze is likely going to fire. So this gives us sort of an early warning. And then the red one, the same thing. And then the stats tool. The stats tool is really valuable because it goes back and it looks at all of the previous squeezes. So if we're looking at Google here, the low squeeze, how many reports we had. So we had 56 long observations, so where it fired to the long side. We had 30 where it fired short. The average run was 6 bars, so this would be 6 days. The average move would be 2.95% or $87.47. For the regular squeeze, you know, 39.21, average run of 5 days, average move 2.51 or $74. And then the high setting, you can see not that often, doesn't happen as frequently, still runs for 5 days, but the average move here is almost $110. Okay, so that's another tool that they have. Like I said, it's very expensive. I do have it. So if you are looking at something in particular and I'm around, just DM me or just, you know, drop it in the chat if I'm there, and I'll gladly pull it up and, you know, give you the details. Okay, so keep in mind that it lasts, you know, between 8 and 10 bars. Safer range would be 6 to 8 bars. So, you know, this is just based on the squeeze. Obviously, we would not exit unless we had a valid signal or it met our targets. So remember, strat first. all of these add-ons later. So on an hourly chart, you know, it would last 6 to 8 hours. Daily chart, 6 to 8 days, weekly, 6 to 8 weeks, monthly, 6 to 8 months. And if you can get a monthly chart, you know, it doesn't happen very often. When it does, you know, you can get a real powerful move. There's also something called the multi-squeeze, where, you know, it's just basically would look something like this, where it tells you what all of the different time frames are doing. So you can see here that you had a squeeze on the week, the 4-day, the 3-day had a black dot, 2-day, and then the 1-day, and then you had more squeezes here. And so just how FICO had spoken about, you know, the domino effect, right? So if, you know, this is a 2-2 reversal, this will, and it, you know, it gets to this trigger, it will trigger this. So, you know, the 30 will trigger the 60, which will trigger the hour, which will trigger the 2-hour. The same idea exists with the squeeze, right? So if you have multiple squeezes over multiple time frames, when one fires, then it will give energy to the next one, which will then fire off, which will give energy to the next one, and so on, right? And so here's an example with, again, the stats. You can see that the Netflix details here is about $25. So from when the squeeze fires off to the upside, you kind of have a target of where it might go, just based on what has happened in the past. Again, we got to make sure that we're always using the strat first, because that is, you know, that's our method here. Okay, so just a couple of examples. You know, you can see gold, you can see Amazon pre-split, and again, just additional tools that are available to you. So how do we actually use it with the strat? Okay, so Ray, if you know STRATalorian, Ray Jensman has done an interview with Cyberdog. So on the weekend shift back in January, he had gone through it in detail on how he uses the squeeze with the strat. It was absolutely fantastic. You know, I figured that you might as well just watch that video, because he's been doing it for quite some time, and he gives a really clear explanation of how he uses it. So instead of, you know, having this class be, you know, an hour and a half long, you can just watch that YouTube video at a later date. So does anybody have any questions on what the squeeze is, you know, how it's made, how we use it, how to load it up, anything like that? Again, this is just a simple intro to what is the squeeze, and then we can build on it going forward. So if you do have questions, feel free to unmute your mic. Otherwise, thanks for showing up. Always appreciate the love and the support, and happy to help. So I'll hang out here for a couple of minutes if you want to ask any questions. And, you know, I'll just put up my trading view here so that you can see. So this is like the SPX right now. And if we look at it with the strat loaded up, you know, we can see here how we had a slingshot squeeze, right? So here we had our 2-2. We were in a red dot squeeze. When this fired, you can see how much of a move we had to the upside. And so if you just load it up and look at it with the squeeze, you know, it's a very powerful combination, right? If you get good at, if you already know the strat, then adding the TTM squeeze, you know, would not be considered blasphemy. You know, you're not going to get kicked out of the church of the Alpha Pack if you use the TTM squeeze. At least I don't think so. But it's a very powerful tool. Okay. You can see how if you get a signal, you know, an actionable signal, again, remember, everything we do comes back to the strat, and it starts with the strat. But you can see how if you just add another tool into your toolbox, you know, even though you had this chop here, it still told you, hey, there's a squeeze. And then when the squeeze fires off, you get your move. Again, here, you know, we had one where it fired off. Really nice move on this one. You would have already gotten in here. it's already telling you that this is a slingshot squeeze. You got your 2-2 reversal, you know, your entry there on the daily. Of course, make sure you're not going against time frame continuity. Always got to stick to the strat. And you can just see how it fired off to the upside. Okay, let me see the questions here. It doesn't matter how many red dots there are. Yeah, actually, that's a great question, Bannon. So generally speaking, I know John Carter will wait for at least 4 to 5 dots. But I mean, a squeeze is a squeeze. So even if, for example, you know, we look here where we were in a squeeze for 2 days, it fired, we came back into a squeeze, right? Because, you know, don't get caught up in the chop. And then when it fired off again, you know, that was when you got your actual move. And this was just, you know, that last week where, you know, a lot of us made a lot of money. So you had the squeeze, fired to the upside, didn't really do much, got caught up in the chop. And then when it finally fired to the downside, remember here, the momentum was already blue. We had our 2-1-2, right? So again, many of us got in on this break. And well, the rest is history. But you can see that when that fired off, you know, that just confirmed what we were seeing with the strat. And then just took off from there. The indicator on TradingView and who created it. Yeah, so that was actually right at the beginning of the presentation. I'll pull it up here. So that would be Squeeze Pro Indicator by Mackett. And actually, let me just throw that up here on the chart. And so you can see that, you know, it's very close to what the regular squeeze is showing. And in fact, I think I had changed the color on this, but you can see that here it's black and here it's orange. I think that's to do with my settings, but you can see that the momentum's pretty close and everything else lines up pretty close. So this top one is the actual version from Simpler Trading, you know, the paid version, and this is the free version by Mackett. So again, it is Squeeze Pro Indicator by Mackett Zero.
And then Strat, I know you said we could use this on any time frame, but let's say for picking contracts, when you're trying to use this for options, are you looking more for quarterly, monthly, weekly kind of swings, kind of trades? How would you use the TTM squeeze on that?
So if I'm trading the TTM squeeze, so everything starts with the strat, right? The TTM squeeze will just give me an idea of when I can expect a greater than expected move. So, you know, when there's times that there's a squeeze, it just gives me an indication that the options are likely going to be mispriced because, you know, we had a contraction in volatility and the market maker would not have priced that into the expected move. So all the squeeze is telling us is there is a potential for a greater than expected move compared to when the options are priced in. And so if we think about that from an options perspective, right, you know, if you pick your contract correctly, you will get an increase in implied volatility. You get the gamma boost as well. And of course, your delta increases the further you get in the money. So, you know, if I see that there's a squeeze and normally I might take, you know, 1 strike out of the money, well, maybe if there's a squeeze, I'll consider going 2 strikes out. Again, everything boils down to and starts with the strat. So I'm always looking at my strat targets first. The squeeze is just an additional bit of information that tells me, you know what, there's a lot of power potentially behind this move. And oftentimes the cool thing about the strat is you will actually see that the strat will give you the indication that there's an actionable signal before the squeeze even fires, right? So if we would have gone in here on like this 2-2 reversal, you know, the squeeze still hadn't even fired until up here. So just because there's a squeeze doesn't mean that, you know, you ignore the strat. But back when I used to trade the squeeze system, you know, with the EMAs and basically what you saw in John Carter's presentation there, it was no squeeze, no trade, right? So here with the strat, it wouldn't be the same rules. So you just want to keep in mind that we're always looking at the strat first, our actionable signals. We have to pay attention to time frame continuity. But the squeeze just tells us that, hey, maybe the options here are not priced based on the potential for a greater than expected move. So hopefully that answers your question.
Yes, sir. Thank you, Mike.
Happy to help. The book that I recommended is Mastering the Trade. It's by John F. Carter. I think the 3rd edition is out now. First edition, second edition are just as good. You can get it on Audible. If I'm not mistaken, Nikki had shared a link for free audiobooks. Or whoever shared it, if it wasn't Nikki, but that should be in the resources tab. And so if it's there, great. If not, it's definitely worth the $15 that you'll pay for it. The only thing is that the book has illustrations. And so if you're listening to it on audio, you don't actually get to see the illustrations, but the stories and, the information just as valuable. Okay, so that's it for me. If nobody else has any questions, I won't keep you longer than 30 minutes.
Hey, Strat, I got one question for you.
Yes, sir. Of course.
Once we've loaded the study, do you recommend any certain way that we set the settings up on the study?
Yeah. So the main thing is, if you're trading equities, you want to make sure that extended hours are off. So if I go back to the presentation, I'll show you exactly where to see that.
So for example, when we have the study screen up in TOS and you click on the wheel and it opens up where you can do your inputs and plots, any recommendations there?
Yeah, don't change the settings. Keep the settings the way they are.
Okay.
It's not, if you have the Squeeze Pro, the different settings would show you the different colored dots. So you don't want to mess around with those. And how you load it. Here we go. So this is where you would find it in TOS, right? So add study, John Carter studies, TTM Squeeze. For Trading View, that's where you would find it by Mac at 0. And then there was a slide here. Here. So in equities, in your settings, if you're trading equities, you want extended hours to be off. Otherwise, you're going to get a whole bunch of messed up squeezes that aren't really there because it'll factor in after hours trading. If you're using futures, if you're using Forex, if you're using crypto, or if you're using the squeeze with any of those Forex futures or crypto, you would keep extended hours on. So it's just for equities that you keep it off. Other than that, you don't change any of the settings.
Gotcha. Thanks. I won't tinker with it at all. I'm gonna go ahead and close it before I fat finger something. Thanks, man.
No problem. Okay, yeah. So Bannon, I see that you mentioned it from, yes, use thinkscript.com. That's exactly the site that I was referring to. I don't know if it's all free or if it's not, but he's said here that he'll put that in Discord. I think they are free. And Nikki, thanks for sharing that. All right, so that's it for me. Any other questions? If not, then have a great night, and we'll see you all first thing in the morning. Take care and have a good night. Bye, everyone.
Thank you, sir.
Happy to help as always.
All right.